Yes, my dear student. How are you all? I know you all are giving your best. I am also doing super duper great. As we all know that CA final September 2025 exam for group 1 is now over and students who are not writing group 2 are now waiting for the result. लेकिन रिजल्ट में भी टाइम है और क्योंकि रिजल्ट में टाइम है all the students are anxious to know how much marks they can score in each paper. जो कि नेचुरल है, इट इज 100% नेचुरल. एंजाइटी हो रहा है कितना कितना मार्क्स आएगा कौन कौन से पेपर में, जिसके कारण आप परेशान भी हो. बट हाउ कैन यू अंडरस्टैंड हाउ मच मार्क्स यू स्कोर इन ईच पेपर? फॉर दैट यू वांट suggested solution given by ICAI. But ICAI will give suggested solution. We also don't know when they will give. And because of that reason, in this video, I'll be sharing suggested solution of CA final financial reporting paper, so that you can compare your approach with my suggested solution, identify how much marks you can score in this particular paper, and right now you can decide about your next step with more clarity and confidence. Just try to understand. आपको डिसाइड करना होगा आज ही कि आपका नेक्स्ट स्टेप क्या होना चाहिए. डोंट वेट फॉर द रिजल्ट. रिमेंबर वन थिंग, एक बात ध्यान सुनिए. वन एग्जाम कांट डिसाइड योर एफर्ट. वन एग्जाम कांट डिसाइड वेदर यू आर सक्सेसफुल और यू आर अनसक्सेसफुल. आई डोंट नो हाउ मच मार्क्स यू विल बी गेटिंग इन दिस पर्टिकुलर पेपर. देखिए, अगर आपको अच्छा मार्क्स आ रहा है, रिलैक्स, एंजॉय. बट इफ यू हैव वन सिंगल डाउट, if you have little doubt that you may not pass in this particular paper, don't waste your time. Don't wait for the result. You should start your next step right now only. Just go through this suggested solution, identify your mistake, analyze it, and try to improve it, so that next time whenever you are coming back, you should come back even stronger. That is the real objective of giving this suggested solution. अगर आप ये solution सिर्फ ये जानने के लिए देख रहे हो कि how much marks you are scoring and after that you are doing nothing, don't listen this video, because you will be in trouble for the next 1 month. आप बहुत परेशान रहोगे. तो बी स्ट्रॉन्ग. मार्क्स जैसा भी हो, दैट विल नॉट डिसाइड योर फ्यूचर. आपका नेक्स्ट स्टेप आपका फ्यूचर डिसाइड करेगा. ये पॉइंट जानना जरूरी है. नाउ कमिंग टू द सॉल्यूशन. इन दिस पर्टिकुलर वीडियो आई विल बी गिविंग डिस्क्रिप्टिव क्वेश्चन सॉल्यूशन. So what about MCQ, multiple choice question, that is already given by me in the previous video. The link of that video will be given in the description of this particular video. अगर आपने नहीं देखा है तो वो वहां जाके देख सकते हैं. So in this video we will be only discussing the solution for the descriptive questions. Okay. Before I start the discussion, let me give you a disclaimer that whatever solution I have given, that is based on certain assumption, and my assumption can be different from the ICAI assumption. Because of that reason, the solution given by me may be different from the ICAI final solution. For final solution, we need to wait for the ICAI suggested solution. However, I have taken my best effort to take all assumptions as per ICAI guidelines. With this, we can start a discussion. But before we start a discussion, if you are new to this channel, don't forget to subscribe this channel, because your each subscription motivate us to make this video, make more video like this. Also do like this video and share this video with all your friends. Now we can start our discussion for each question one by one. Now coming to the first question. First question is a mandatory question जो आया था आपका consolidation chapter से. Similar question was asked in one of the past exam. अगर आपको याद है, that was hammer limited question, that was related to step acquisition. ये भी question step acquisition का है. However, in this question they have made two changes, and because of that two changes, the student were confused. Correct? I'm not reading the entire question again. मैं question नहीं पढ़ रहा हूँ because already you know the questions. If you are reading this particular question for the first time because you have not written the exam in this attempt, you will be writing the exam in the next attempt. So of course आप question खुद से पढ़ लीजिए. I'm not wasting my time in reading the questions. Okay, sir? Yes, sir. So of course it is a question balance sheet has been given. You can see first they have given 12 lakh equity shares were acquired by Z Limited, means parent company, on 1st April 2024. This is the first acquisition. And further acquired 13 lakh 50,000 equity shares on 1st Jan 2025. So of course 1st Jan 2025 is the date of acquisition. फिर उनका cost price दिया गया है. The first acquisition was at this amount and second acquisition was at this amount. This was a new point number B. And because of that reason, students were confused. In Hammond Limited question, they have given that parent company has invested in a debenture of subsidiary company. In this question, they have given parent company has invested in the preference share capital of subsidiary company. अब देखिए preference share capital can be classified as equity or liability. If the preference share capital has been classified liability, then the treatment will be similar to that debenture wala treatment. But in this question, you can see preference share capital has been given under the head share capital. If the preference share capital has been given under the head share capital, can you assume it is a liability? You can't assume it is a liability. It means it is an equity. It has been classified as equity. Now, if you are assuming it is a liability, then from my point of view, that assumption is not correct. So, as per my understanding, it should be classified as equity. And now, if the preference share capital has been classified as equity, the treatment will be different. Treatment will be different. Of course, this type of question we don't have in ICAI study material, but similar question we have done in the class as an illustration, as an example. Yes, sir. Okay, sir. So this we'll discuss. Then they have given retained earning on 1st April 2024 and general reserve on that date. Then they have given R Limited had paid dividend of 12% on his paid up equity share capital out of his retained earning. The entire dividend received by Z Limited in August 2024 means before the date of acquisition. It is quite clear that it has been paid before the date of acquisition. Yes, sir. Then point number E was also a new point, means not a new point with a confusion in this particular point. Normally, whatever revaluation, whatever fair value adjustment we do, that we do on the date of acquisition. And for that, fair value information is always given on the date of acquisition. But in this question, they have given fair value information on 1st October 2024, which is before the date of acquisition. And here, a lot of confusion started. Machinery was overvalued by 50 lakh, means they have given fair value loss, but not on date of acquisition on 1st October, for which necessary adjustment are to be made, and they have given 10% on WD basis. Correct? We'll discuss about this point number E. Then point number F was very simple. BR were drawn upon R Limited, out of which bill amounting to rupees 3 lakh have been discounted with the bank. So of course you can see BR is 4 lakh and BP is 7 lakh. So 4 lakh is discounted. 3 lakh is discounted, which cannot be cancelled. So we can cancel only to the extent of 4 lakh. We can cancel only to the extent of 4 lakh. This is very simple. You are required to prepare CBS without rounding off. In rupees without rounding off. It means, can I say, we should take the entire figure? From my point of view, they want to say that you can't do rounding off in lakhs. You can see the balance has been given in lakhs. Balance sheet has been given in lakhs. So from my understanding, because for the first time they have given without rounding off, means you take the full figure. As per my understanding. Correct? For that we need to wait for ICAI solution. But what I understood that we should not do rounding off in lakhs. We should take the full figure because they have given in the additional information full figure. That is my understanding. Once again I am saying. Okay, sir? Yes, sir. Understood. With assumption that group has adopted fair value method. Okay, sir. And they have given fair value of each equity share, that is 40 rupees on the date of acquisition. Thank you very much. Ignore taxation. Thank you very much. And adjustment if any preference dividend. If any adjustment related to preference should be ignored. Means that's what is special point for preference account that they have asked you to ignore. Means the question becomes simple. Because this was one super adjustment which we have discussed in the class, but they have asked you to ignore it, and because that isn't, from my point of view, the question becomes simple. Means even though you have done one mistake in point number B, your answer will be more or less correct, because in this, so I will say, in this, whatever you have done, I think you have done as per your best understanding. Okay, sir? Yes, sir. Now let us come to solution. You can see already I have drafted the entire solution. I have drafted the entire solution. So from where we'll get this PDF? Of course, you can get this PDF from my Telegram channel. So join my Telegram channel. The link of the Telegram channel will be given in the description of this video. Do join the Telegram channel. Not only for this particular PDF, all my free resources are in my Telegram channel. You'll get everything in my Telegram channel for CA final financial reporting paper. Everything, top to bottom. And this time I just want to say that most of the questions were from my expected list. And there are many questions which I have asked in my mock test. On my test paper, I have conducted 5 chapter wise tests and 1 final mock test before exam with all the students who have joined my mentorship group. And there were some questions directly which I have asked in my test paper that has been asked in this particular paper. Means when I have seen this particular question paper, I was of the view that this is the question paper made by me. That was my viewpoint, correct? And this question number 1, it is also expected question, Hammer Limited, and they have changed the 2 point that we need to understand. Of course, can I say we can't expect same to same question. There will be some new information in the mandatory question that we have understood from the last few attempts. For that we are already prepared. For that already we are prepared. Now how you are managing that in exam hall, that you need to understand. You need to understand how to manage a new information in exam hall. Yes, sir. Now coming to solution, first we need to find out a holding ratio of parent company in equity shares and preference shares of subsidiary company, because that information is not given in the question, correct? That we know. You can see there are 2 acquisition date. First acquisition date and second acquisition date. Second acquisition date will become the date of acquisition. So on the first acquisition, they acquired 12 lakh equity shares out of 30 lakh, to 40%. Then on second acquisition, they acquired 13 lakh 50,000 equity shares out of 30 lakh. It is 45%. Total holding of parent company become 85%. NCS here will become 15%. However, in this question, we need to also find out holding ratio of parent company in the preference shares of subsidiary company also, because preference shares has been classified as equity. This was a new point. Chalega. So how many preference shares? 2,25,000 preference shares out of 6 lakh, that is 37.5%. So what is the NCS here in that? That is 62.5%. Okay, sir. This is the first working note. Coming to second working note, that was very much interesting from my point of view. However, whatever you have done based on your best assumption, believe me, on this you will get marks from my point of view, because in this assumption is required. First thing, for the first time they have given fair value information not on the date of acquisition. Normally, whatever question we have done in all question of ICAI study material, they have given fair value information on the date of acquisition. We want fair value information on the date of acquisition only. But in our question, the date of acquisition is 1st Jan, but they have given fair value loss on 1st October 2024, that is 15 lakh. So what assumption I have taken, that of course 1st 10 to 1st Jan is the pre-acquisition period, and from 1st Jan to 31st March is the post-acquisition period. So 3 months, the first 3 months will be pre-acquisition, and the next 3 months will be post-acquisition period. So we need to do some depreciation adjustment for 3 months and 3 months, 3 month pre and 3 month post. And can I say whenever there is a fair value loss? Why fair value loss? Because in this case, the machinery is overvalued by 15 lakh. Overvalued by 15 lakh means we will decrease it, to that become fair value loss. Whenever there is a fair value loss, we need to calculate saving in depreciation. Saving in depreciation. Now in this question, they have given 10% of WDV. Now whenever I used to teach in class, I used to say whenever they have given rate of depreciation based on 10% on WDV, it means it is reducing balance method. Now whenever there is a reducing balance method, so how to find out additional or saving in depreciation is what formula I have given, that is fair value minus opening balance multiplied by rate of depreciation multiplied by post acquisition period divided by 12. This formula I used to give. But in this question, they have not given fair value information. Now the question arises, should we calculate fair value by doing back calculation? Can you see it will take longer time? And from my point of view, calculation of fair value ICAI don't do that type of solution. We don't take that type of assumption. So in this, what assumption I have taken? 10% of WDV will be directly applied on fair value loss. That is my assumption. That is my assumption. Once again, I am saying if you have calculated fair value, correct, then opening balance, that have taken a lot of time, I know, but that can be also correct. Understood what I am saying? Yes, sir. But simple, let us make it simple. And from my point of view, I will also suggest this only, but we need to wait for the IC solution for that. Correct? What I am saying, whatever you have done on this now, you will be given marks on that. Because this was thoda sa I will say required thoda sa understanding, which most of the students will do as per their own understanding. Got this point? Therefore, marks will be allotted. Marks will be allotted. Don't worry about this. Yes, sir. So pre-acquisition depreciation will be 37,500. Post-acquisition will be also 37,500. Means 15 lakh into 10% into 3 by 12 I have done. Okay, sir. Means on the date of acquisition, what adjustment will do? Fair value loss 15 lakh and saving in depreciation 37,500. Correct? And then saving in depreciation post-acquisition period is also 37,500. Yes, sir. Coming to next working note number 3, we will prepare analysis of profit. This was very simple. Retained earning and general reserve will take closing balance from the balance sheet of subsidiary company and opening balance from the additional information given in the question. This become profit after dividend, will add final dividend. Final dividend will be 12% of 30 lakh, that is 36, 12% of 300 lakh, that is 36 lakh. So this will be profit before dividend. Profit before dividend. This will be allocated in pre and post acquisition period. Pre period is 9 months and post acquisition period is 3 months. So I have allocated both in pre and post acquisition period in 9:3 ratio. Correct. Now can I say, because dividend is paid during pre acquisition period, dividend has been paid in the month of August. August is what? Pre acquisition period. Therefore dividend will be reduced from pre acquisition period. This is also one special point. The dividend will be reduced from pre-acquisition period. Pre-acquisition period. Got this point? So 36 lakh final dividend paid will be reduced from pre-acquisition period. Here you might have done mistake. If you have done mistake, comment me. Got this point? And opening balance will be added to the pre-acquisition period. So this will be the pre and post-acquisition profit. Pre and post-acquisition profit before fair value adjustment. Before fair value adjustment. You can do fair value adjustment from this also, from this working note. Then coming to statement of net asset. In statement of net asset, next working note, we write down equity share capital and other equity. Other equity will be as per this working note that we have taken. Chalega? Yes, sir. Then we'll do fair value adjustment for machinery. So machinery on the date of acquisition 15 lakh loss. An additional, saving in depreciation 37,500 will be added. And in post acquisition period 37,500 will be added. Got this point? So this will become what? Your net asset on the date of acquisition, on the date of consolidation. But can I say, you can see one more special point is given in the balance sheet. You can see in the balance sheet, you can see intangible asset include goodwill of 45 lakh in the balance of subsidiary company. However, in Hammer Limited question, this goodwill adjustment, whatever ICAI has done, I have said that was not actually correct. Are you able to understand? And I used to say, whenever we calculate identifiable net asset, that should be always excluding goodwill, because as per Ind AS 103, identifiable net asset will never include goodwill, and goodwill will be always calculated by using that formula. Chalega? And therefore, whatever goodwill is included in net asset, that will be deducted. This is only the correct. Understood what I am saying? So minus goodwill. And if you have not deducted, then your answer is matching with the ICAI solution, whatever the solution has been given in Hammer Limited. So what you have done, okay. What I am doing, that is also okay. Chalega? Yes, sir. So minus goodwill 45 lakh. So this become what? Net asset. This will become INA. But this is only for equity. This does not include preference shares. Can I say we need to also add preference share capital that I have not added intentionally? Because can I say this will be allocated to equity participant, equity shareholders participant. 1 minute. Equity shareholders participant, that is parent company and NCI, in the ratio of what? In the ratio of 85% and 15%. Correct? But for preference shareholders, the holding ratio is different. Hope you are understanding. Yes, sir. So this will be allocated, a post acquisition profit will be allocated in 85% and 15% that we can allocate. Now, coming to the calculation of goodwill or gain or bargain purchase, you can see I have divided this calculation in two parts. That is equity shares and preference shares. Why preference shares? Because preference shares has been also classified as equity in this particular question. That is a point which you need to understand. Okay, sir. First, we'll do equity share because in that we are expert, we know everything. First, we'll take fair value of consideration paid on the date of acquisition. That is for 45%. 45% के लिए कितना था? 1,55,25,000. This information is given in the question. Then we'll take fair value of previously held equity interest. Fair value of previously held equity interest means 40%. 40% of how many shares? That is 30 lakh. 30 lakh into 40 rupees per share, that is given in the question. So this information has been given in the question. So of course it will become 12 lakh they have acquired previously, and into 14 that become fair value. Of course in this, because Ind AS 103 says cap acquisition, we have to remeasure the previously held equity interest at fair value, and any gain or loss will be transferred to PL or OCI. Then fair value of NCI. Why fair value? Because the information has been given the question to adopt fair value method for NCI. So how many share of NCI? That is 15%. 15%, 30 lakh into 40 rupees per share, that is coming how much? That is 63 lakh. This becomes the total. From this we'll deduct fair value of INA. Of course it should be excluding goodwill. Excluding goodwill, already we deducted. From here already we deducted goodwill. Correct? Yes, sir. So this we have taken. So this is coming gain on bargain purchase. Correct? Suppose if you have taken fair value of INA including goodwill, then your answer will match with ICAI solution in that case as per Hammer Limited question. Got this fine? So you are also correct. I am also correct. So I am doing solution as per my best understanding. Okay, sir. You follow, if you have followed ICAI method, that is also correct. But in that case, in the balance sheet, goodwill of 45 lakh and the gain or bargain purchase, whatever you have calculated, both will come. Okay, sir. Yes, sir. So from my solution point of view, we have a gain or bargain purchase related to equity participant is what? 32,62,500. Now coming to preference shares. Interesting. First thing, can you say on the date of acquisition, nothing has been acquired. Correct. But we have previously held preference shares, previously had equity interest in preference shares, and for that fair value information has not been given. We'll assume it is equal to carrying amount, and carrying amount is given how much? 54 lakh. Means no remeasurement gain or loss in this case. Correct. Then we'll take fair value of NCI in preference share, but once again fair value information has not been given. Fair value information has not been given. So it is how many preference shares? 60 lakh. And what is the total share of NCI in preference share? That is how much we have already calculated. That is 62.5%. That is coming 37 lakh 50,000. Got this point? Or we can say in this way, 60 lakh. 60 lakh out of 60 lakh, how much is held by parent company? That is I think 22.5. That is coming 37.5. You can say in that way also. We'll make a total of this. This will come the total. From this we'll take fair value of INA. Fair value of INA which represent preference shares net asset. That is nothing but 60 lakh. Correct? 60 lakh. So that is coming 60 lakh. So this become goodwill. Goodwill. So this can be adjusted, and the net goodwill, this can be adjusted, and net gain or bargain purchase, which will be ultimately transferred to capital reserve, will be 1,12,500. This solution is based on my understanding. We will wait for the final answer given by ICAI. Okay, sir. What you have done, that may be also correct if you have taken fair value of INA including goodwill. Okay, sir. That is already I have said in Hammer Limited question they have taken including goodwill. ICAI has taken including goodwill. Okay, sir. Yes, sir. Then working note number 6, we need to find out remeasurement gain or loss. Remeasurement gain or loss on previously held equity interest. So fair value already we calculated. Carrying amount is given on the first date of acquisition, that is given in point number A of additional information. So this become remeasurement gain, and it will be added to retained earning in the next working note. Then other equity NCI, this information will take from parent company balance sheet. This information will take from working note of goodwill and gain or bargain purchase. Means this total will come. NCI will be 63 lakh plus 37 lakh 20,000. So I have done the total both for equity and preference shares. Okay, sir. Yes, sir. Then share of profit of subsidiary company. This is already worked out here. this will go to retained earning, this will go to general reserve, and this will go to NCI. Already I have added. You can see already added. Then there is one remeasurement gain. Remeasurement gain will be entirely transfer retained earning, and this will be the final balance of other equity and NCI, which will come in balance sheet. Now we can prepare balance sheet. Balance sheet is with you. So PP, book value, minus will do fair value adjustment on PP, that is 14,25,000 net changes. That will come. Goodwill, it will only the, because our goodwill or gain on bargain purchase, that we got gain on bargain purchase. The goodwill, this is only the goodwill of parent company appearing in the balance sheet. Got this point? If you have adopted ICAI method, so here goodwill will be 75 lakh plus 45 lakh. Understood? So if you have done that, that is also correct. Okay, sir. As per ICAI method. Okay, sir. Yes, sir. Then financial asset, can I say total investment in the books of parent company 375, but out of that, investment in equity shares and investment in preference of subsidiary company will be deducted. That I have deducted, and then investment of subsidiary company has been added. This is the total investment, other investment. Then inventory you can do. Trade receivable minus 4 lakh will do, because that is what? Intercompany balance for BR. Yes, sir. Bills receivable. Cash and cash equivalent you can do. Equity share capital you can do. We will take only equity share capital parent company. Other equity and NCI as per working note we can write down. Current liability borrowing we can write down, and trade payable, then once again minus 4 lakh will do, and the final balance sheet will tally, and balance sheet will be it is 14 crore 44 lakh 50,000 as per my solution. Chalega. This was question number 1. Once again I will say, I have taken some assumption based on my understanding. Whatever assumption you have taken for that fair value adjustment, that might be also correct. We need to wait what ICAI think about that. Okay. Okay, sir. Yes, sir. Coming to next question. Question number 2A. Question number 2A was super expected question. Was there in my expected list. Same to same question I have given in the test paper also. This is nothing but repurchase of compound financial instrument. Correct. In this case, initially there was 15,000 optionally convert debenture of ₹100 each were issued. Contractual rate of interest was 8%. Market rate of interest was 12%. Then on 1/1/2024, it was repurchased at ₹15,75,000. On that date, market rate of interest was 9%. So first we'll do initial accounting. Initial accounting, we need to split the compound finance instrument at fair value of liability component, equity component. For that, we'll take proceed received, that is 15 lakh. We'll do less fair value liability component, that is present value of contractual cash outflow discounted market rate of interest. Market rate of interest is 12% given in the question. Correct. This we can find out interest component, principal component. Why principal component? Because it is optionally convertible. Therefore, it will be initially classified as liability. Yes, sir. This will be the fair value of liability component. This will be fair value of equity component. That we can work out. Yes, sir. Then accounting treatment, we can give bank account debit to financial liability to equity instrument. Yes, of course you can do. Then we'll do calculation of interest expense, because they have asked for the entire how many years? 5 years. This we can work out. The financial liability opening balance will take 12,83,100, and then we can find out amortized cost table by using effective rate of interest, because there is no transaction cost. Effective rate of interest and market rate of interest will be same. That we can find out. Yes, sir. Then repurchase date accounting. First, we need to find out fair value of liability equity component on the date of repurchase. What is the fair value of consideration? Fair value of consideration paid, that is given 15,75,000. This will be divided into equity and liability component based on the same understanding. First, we'll find out fair value liability component, that is present value of remaining contractual cash outflow discounted by using current market rate of interest, that is given how much? 9%. We can do that we can do for the remaining 2 years. That we can find out interest and principal account. This will become fair value of liability component. The balancing figure will be fair value of equity component. So this has been paid for equity. This has been paid for liability. Then we'll find out the repurchase gain or loss for liability component, equity component separately. We will take fair value of consideration paid as per the previous working note. Carrying amount as on the date of repurchase, we will take from this computation, that is 13,97,735. That is at the end of third year. Okay, sir. Then we can find out, and carrying amount of equity component will remain same, because we never do subsequent remeasurement of equity component. Equity component को हम subsequent remeasure नहीं करते हैं. ये जो मेरा loss आया, this will be transferred to PL. ये जो मेरा difference आएगा, that will be transferred to other equity. What will be journal entry? That is financial liability account debit at carrying amount. to bank with consideration paid and the difference will be loss will be debited to PL. यहाँ पे भी same entry bank account to equity component means equity instrument account debit to bank account and the difference will be adjusted with other equity. It can be transferred retained earning or any other reserve and surplus. ये आपका क्वेश्चन नंबर 2A था. कमिंग टू नेक्स्ट क्वेश्चन. करेक्ट, हम सब डिस्कस कर रहे हैं, सारे क्वेश्चन को डिस्कस करेंगे. ओके सर. देन क्वेश्चन नंबर 2B, once again it was a same to same question given RTP. This time RTP similar question was given. We need to prepare cash flow statement. In this question, good point was that they have given some exchange gain or exchange gain. So for that, a special adjustment required in cash flow statement. Correct. I'm not reading the question again because you have read the question. They have given opening cash and cash equivalent. Then they have given 3 transactions related to foreign currency transaction. Correct. Now, first transaction is related for the purchase of goods, then sale of goods, then there was some foreign currency borrowing. And they have given in the first transaction, there was a gain of 5 lakh, 3 lakh and 3 lakh. Understood? Out of these, on debtor, because that is already the exchange gain regarding, you can see the amount was already settled. So this is realized. But point number 1 and point number 3 will be unrealized. You can see here the translation has been done. It is not yet settled. So this will be unrealized and this will be also unrealized. This was the question. And they have given, beside this exchange gain, there was a gross profit of how much? 5 lakh. Gross profit means sales minus purchase, sales minus cost of goods sold. Correct? You need to prepare statement of cash flow, ignore taxes. And this was the question. In this case, how to prepare? We will start with PBT, profit before tax, means we will start with cash flow from operating activities. And of course, we will start with what? PBT already given the question. Gross profit they have given 5 lakh and exchange gain they have given 11 lakh. That becomes 16 lakh. Now we'll do adjustment. There is only one adjustment, unrealized exchange gain. That will be eliminated. But we need to only adjust the unrealized exchange gain related to financing activity. So relating to financing activity, that is 3 lakh that we have eliminated. Correct? That become operating profit, related operating profit before working capital changes. Then we'll do increase in trade payable. Will plus. So opening trade payable was 0 and the closing trade payable is 72 lakh. That will be added to increase in trade payable. आपने add कर दिया. This will be net cash flow from operating activities. Investing activities nil. Financing activities, there is only one transaction, that is foreign currency transaction, and you have received how much? 75 lakh. That is the proceeds received from foreign currency borrowing at transaction date exchange rate 75 lakh. That will be added. This will be the total net changes in the cash and cash equivalent, means that increase in cash and cash equivalent during the year. We'll add opening balance. Closing balance is not given. So closing balance of cash and cash equivalent can be worked out by adding these two. Correct? This is one solution. However, you can also do alternative solution. Means what you can do? You can add, just try to understand. If you have done that, that is also correct. Means in this question, I have only eliminated unrealized exchange gain relating to financing activity. But we have one more unrealized exchange gain relating to operating activities. So operating activities, it was how much? You can see related to point number 1, it was how much? 5 lakh. So that also you can eliminate. But if you eliminate, suppose if you are eliminating not 3 lakh, you are eliminating 8 lakh. Suppose आपने eliminate कितना किया? 8 लाख eliminate किया. तो यहाँ पे trade payable में आप क्या करोगे? Then you will take trade payable at transaction rate exchange rate. तो transaction rate exchange rate में कितना आ जाएगा? If you want to eliminate the unrealized exchange gain related to operating activities also, that is also correct. Then आपका trade payable at transaction date exchange rate will be how much? 77 lakh. तब आप 77 लाख लोगे तो यहां पर आ जाएगा 77 लाख. करेक्ट. तो अगर आपने यहां पर लिया 8 लाख तो यहां लोगे 77 लाख. और देखिए अल्टीमेटली आपका आंसर सेम होगा. अल्टीमेटली आंसर विल रिमेन सेम. यू कैन सी सेम थिंग. करेक्ट ना? मींस वी डिडक्टेड 5 लाख here more and we have added 5 lakh here more. So ultimately your answer will remain same. So you can do in this way also. This is also correct. Okay sir. Yes sir. Chalega. This was also one of the question given RTP. If you have done RTP, you have managed this question in exam hall. And similar question we have in our question bank, similar question we have in previous RTP also. Okay, sir, it is not a new question in RTP. Coming to question number 3A, this is a super duper expected. Every time from India's 90, we expect this type of questions only, correct? I think no need to read the question. It is a question where we need to find out DBO and plan asset when a statement for reconciliation to get actual gain or loss. And then we need to find out how much will be transferred to PL and what will be the amount shown in the balance sheet. Okay, so I don't think so in this any discussion required. No discussion required. Same to same question have been asked in previous attempt. Same to same question in this attempt. And I'm not doing any discussion. One doubt will come. Doubt is what? When I read the question, I have that doubt. What is the requirement of the question? You are required to suggest the accounting treatment. Now, suggest the accounting treatment means what? Journal entry or extract of financial statement. There is one doubt. What I have understood that whatever question of this nature ICAI has given in their ICAI study material, in all questions they have given extract. On that basis, I have also given extract. But if I am the student, I am reading this question, I may give journal entry. So if you have given journal entry, I think that is also correct because they have written you are required to suggest accounting treatment. Accounting treatment is journal entry. If you have given journal entry and you have not prepared extract, from my point of view, you should be given marks. Because they have not given, you should be given extract of financial statement. Chalega? Yes, sir. Coming to next question, point number B, means we are doing abhi 3 ka B. 3 ka B. This is a question related to EPS. Very simple question. I think no discussion required this. In this question, for the first time, they have given ESOP as well as warrant. And here is the treatment of ESOP and warrant are same. Treatment of ESOP and warrant are always same. So in this, what they have given, first we need to calculate basic earning per share. So for basic earning per share, we want profit. To profit, they have given 91,20,000. And they have given 50 lakh. So this divided by this is equal to what? Your basic earning per share. Now, in ESOP and warrant, we need to find out number of potential equity shares having dilutive component. For that, we have one formula. Formula, I think you know. The number of option or number of warrant minus number of shares which can be issued at fair value. The remaining portion will be dilutive component. That will be considered for diluted earning per share. That has been given in my solution. Let us check. You can see calculation of potential equity shares. So for warrant, I have calculated 80,000. For option, we have calculated 28,000. Formula, it is very much simple. Everyone knows this. Correct? Means for 2 lakh minus 2 lakh into 84 is the exercise price divided by 140. That is average fair value. Same thing is for options. Then for basic, we have done this divided by this 18.24. Then we'll add effect of warrant and effect of option for diluted earning per share. Numerator will not be affected. Only denominator will be affected with the number of potential equity shares having dilutive component. This will be the total and this will become diluted earning per share. Chalega? Yes, sir. Coming to next question. Next question is 4A. Once again, super duper expected. This question once again I have given in my test paper, and the same question is my expected list. And I used to say super expected. This came in exam. I think no discussion required because this is already known question. In this question, there are 3 years. They have given expenditure. Correct now. Expenditure on 1st Jan, 30th June, 31st March, 30th June. This is the first year. This is the expenditure in the first year. This is the expenditure in second year. This is expenditure in third year. On 1st July 2023, R Limited obtained 100 lakh loan from Nationalized Bank at an interest rate of 12%. So because there is only one loan and that is general borrowing, that become the capitalization rate. And this information they have given, you can read it. You are required to calculate borrowing cost that R Limited is permitted to capitalize as a part of building cost for each of the financial year. You need to find a borrowing cost to be capitalized. We need to do it. You can see for the first year, because the loan was taken in the second year. So there is no borrowing cost in the first year. And therefore, no capitalization. No capitalization. But second year, what India 23 says that we need to find out the carrying amount of the qualifying asset on which the capitalization rate will be applied. And for that, we need to take the expenditure of previous year also. Correct? This point we have discussed a lot of time in our revision class as well as in our regular class also. So on 1/1/2023, 10 crore. On 30th June, 40 crore. 31st March, 30 crore. This is for second year. Can I say because the loan was taken on which date? The loan was taken on which date? On 1st July. The 1st July to 31st March, 9 months. So 9-month capitalization will be done. So you can see 9-month capitalization have been done at a rate of 12%, and we calculate 4.5. This is the borrowing cost to be capitalized for second year. Third year, is 1 second expenditure will be taken from the beginning, but capitalization will be for only 3 months. That is from the 1st April of the third year, and the assets were ready for use on 30th June. Means construction was completed. Means only 3-month capitalization, because borrowing cost will be ceased to be capitalized from 30th June. So 3-month capitalization. So 10 crore, 40 crore, 30 crore, and can I say interest of previous year which has been capitalized, that will be also taken into consideration, 4.5, and 20 crore for the last year which has been incurred, the construction cost, correct? Because it was incurred on 30th June. For that, can I say 0-month capitalization? But because these were the opening balance, for that 3-month capitalization will be done. 3-month capitalization, and you can work out this will be 2.535. Okay, sir. Yes, sir. Coming to the answer number 4B. As the question number 4B, lot of doubt came, and there was genuine reason for the doubt. I will say genuine reason. Why? The question, whatever is similar question has been given ICAI study material. In that they have given transaction cost, and in this question they have not given transaction cost. So any student who are more conceptual, they have taken something else, and the student who are not conceptual, they have done something else. From my point of view, genuine doubt is coming for this question. Let us read. Draft Limited took a long-term loan of $30,000 from an entity registered in USA on 1st April 2024. Interest of $2,400 is payable annually on 31st March, starting from 31st March 2025. Okay, correct. The loan is repayable on 31st March 2030, means how many years? 25, 26, 27, 28, 29, 36 years. And the effective annual interest rate is 11%. Here the doubt came. Now, I said in the class, whenever the effective rate of interest is given, it means one thing is clear, there is a transaction cost. And the transaction cost is missing in this question. This was only the point where many students have done, taking transaction cost into consideration. And that is correct only, means that will, I will say, best assumption. Because effective rate of interest is given. Effective rate of interest is given, because normally whenever question is silent, we'll say whatever contractual rate of interest, that is at market terms, and effective rate of interest comes only because of what? Transaction cost. That is our general assumption. Means if the question is silent about market rate of interest, we'll say the contract is at market terms, and we are calculating effective rate of interest because of transaction cost, and transaction cost is not given in the question. Doubt came here. Doubt came here, which is genuine doubt. Genuine doubt. Transaction cost is missing. The appropriate measurement basis for this loan is amortized cost. Relevant exchange rate, they have given opening, closing, and average for expense. Calculate initial measurement amount of loan, finance cost, closing balance, and exchange gain. Similar question we have given, but in the ICAI study material question, they have given transaction cost, and because that is a doubt came. From my point of view, as per ICAI understanding, means what I have understood ICAI, means they will never calculate or recompute transaction cost. So first, taking ICAI viewpoint, means taking simple viewpoint, if there is no transaction cost, then the game is very simple. Most of the students might have done in this way. And what I understood, ICAI emotions, and I always say in the class that you need to understand the emotions of question. We never do the back calculation to find out transaction cost. They have given effective rate of interest, and I say that whatever information is given, that you apply. That only I say. Are you able to understand? Of course, I am saying conceptually, if you are saying there is a transaction cost, it is 100% correct. But sometimes we need to be what? As per the information given the question. If you take only the information given the question, and normally we never recompute transaction cost, whatever not given the question. So simple understanding of the question is what this solution. Initial measurement 30,000 into 74. That initial measurement date, it is 74. Now 74 this amount will come. Then finance cost by applying EIR, this is interest expense by applying average rate, this amount will come. Then contractual payment is 2400, for that will take closing rate, this amount will come. This is the closing balance as per this calculation, but because it is a foreign currency monetary item, Ind AS 21 says apply closing exchange rate 78, so this amount will come closing balance, and this is the exchange loss will be transferred to PM. In this I have taken assumption that if ICAI is thinking that there is no transaction cost, this is the answer. But I will say this is the better assumption. I don't know what ICAI is going to take. I am not saying what is correct, what is wrong. From my point of view, both is correct, for both marks should be given. From my point of view, both are correct, for both marks should be given. But I am not checking your paper. I am not ICAI. Okay, sir. Yes, sir. If transaction cost exists, then we can find out. So effective rate of interest if given, so can I say present value of contractual cash outflow discounted at EIR will be equal to net profit. Net profit means fair value minus transaction cost. We can find out net profit. So initial carrying amount, that is profit net of transaction cost, will be present value of contractual cash outflow discounted at EIR 11%. So what I have taken 30,000 present value factor at 11% for 6 years, then 2,400 was the contractual interest payment. For that we have taken annuity factor, and I have recalculated net profit 26204. This is net carrying amount. Means one thing is clear, that transaction cost will be 3796. 3796, but my initial carrying amount, initial measurement will be at 26204. If you have done this, believe me, you are more conceptual. And if you have done this, I will say a clap, means I just want to give a clap to you. Because in exam, if you are thinking like this, means you are conceptually strong. But God knows what ICAI is thinking, that I don't know. Because normally we go as per the flow of the question. That is my experience, because we know the emotions of ICAI. I am teaching from last more than 15 years. I am with ICAI. I will say more than 20 years, because there are some period of student life also. Correct now. So I know the emotions. So it can be one possible answer given by ICAI. Correct? Or if ICAI thinking conceptually, this can be also answered. Then we need to wait for the ICAI solution. Correct now. Marks should be given, not given. That I can't decide. I can't decide. If you ask, I can only stand for you, but I can't decide that. Are you getting what I am saying? Now you need to comment in the comment box that how many of you have done assumption 1, how many have done as per assumption 2. Correct now? Got this point? Yes, sir. So into 74, this will come. Then finance cost by applying EIR will be this. Into average will be this. Then 2,400 is the payment. Into closing will be this. This is the closing balance. This and this will be closing balance, because this is foreign currency monetary item, will translate by using closing exchange rate. This and this will be exchange loss. This can be also one answer. This can be also one answer. I have given both the answer. Means I am not saying you are wrong. I am not saying who is correct, who is wrong. Better version of answer will be this. Assumption number 2. But ICAI, I know ICAI, because I don't know, I don't understand ki when transaction cost is given, whether in any question we recalculate that. That is the point. So because I am teaching and I know emotions, we need to wait for the ICAI answer. Okay, because always I say in the class, we need to understand the emotions, requirement of the questions. Correct? And I always say in the class, sometimes conceptually strong student will die in exam hall, because they will think conceptually and they will do sometime they will give more expert answer. Quite possible. So, I mean, right now we will not fight for this. You also don't trouble yourself much. Already I have said both answer is correct. We need to wait for the ICAI solution. Okay, for you, of course, I will inform to the ICAI that both answers are correct. That much I can do from your point of view. Okay, sir? Yes, sir. Relax. Right now, relax. Don't take stress. Correct now. Why you are taking so much stress? Life is not only exam. Life is bigger than exam. You think what you can do extra in your life. Correct now. There are many things. I'm not saying quit. But life is not based on the exam result, that I am saying. Of course, if you have taken assumption number 2, your answer is correct from my point of view. Okay, sir? Yes, sir. Coming to 5A. 5A, again, it is a question of Ind AS 115. Once again, expected same question I have given in my test paper. With 3 questions or dot to dot I have given in my test paper, which I have drafted for the last attempt, which I have given to all the students who have joined my mentorship group. Correct now? I was very happy. The 3 questions was from my test paper, and most of the questions were from my expected list. This is also simple question. It is a question of modification. I don't think so this require so much discussion. I don't think so. Just read it. This question here, initially for the first year, the transaction price was 120, expected cost was 71 lakh, and expected profit is 49 lakh. And this question, it is given that bonus will not be included because the company cannot conclude that it is highly probable significant reversal of the amount of cumulative revenue recognized will not occur. That reasoning I have given. So bonus was not included initially. Because it is given the question that company has satisfied 60% of performance obligation, means out of 71 lakh, 60% of expense has been incurred. So this was the cost incurred. Correct. And based on this, can I say they will recognize the revenue? So 60% of 120 lakh, this much revenue recognized. This was the cost and this was the profit already recognized for the first year. Second, there was modification. So as per modification, the transaction price was increased by 50 lakh 50,000, and now bonus will be included because now entity of the view that bonus will be included. So 35 lakh will be included. So this becomes the revised transaction price. Expected cost, they have given increase in expected cost, so it will be increased by 7 lakh 60. Now it becomes 78 lakh 60,000. Cost incurred till date will remain same. वो तो 42 lakh 60,000 होगा. Now your percentage of completion means how much progress has been satisfied for performance obligation, that will remeasure, and that will come 54.20. So 54.20, now you will apply cumulative catch-up adjustment basis to find out how much additional revenue will be recognized. Correct? So that will be your new amount of revenue, your new amount of transaction price is 1 crore 70 lakh 50,000 into revised percentage minus how much already we have recognized. 70 lakh. So this much will be again means additional revenue recognized due to modification. Got this mind? Yes, sir. Now coming to question number 5B. This is a question related to Ind AS 101. However, it is not a new question. They have given 3 points in this question. 3 point over there, 3 point they have taken from 2 questions of ICAI study material, means ICAI resource. This first point has been taken from one of the question, and the second point they have taken, second and third point they have taken from some other question. However, balance point we have done this type point in the class. First point number 1, क्या बोला गया? PP comprise land for capital appreciation costing rupees 15 lakh, and therefore it will be reclassified from PP to investment property. Beside exchange difference of 1,50,000 were capitalized to depreciable PP, on which accumulated depreciation of 37,500 was recognized. This is not at all relevant. Why? Because company want to avail the deemed cost exemption. So if they want to adopt deemed cost exemption by using the previous gap carrying amount, in that case we'll take previous gap carrying amount and will not do any adjustment with the previously capitalized exchange difference, which is as per para 46 of para 46A of AS11. Correct? In this case only reclassification will be done. PP will be reclassified to investment property. Then they have given ki B Limited has acquired one subsidiary 70%. Correct now? Some year before, and they have recognized goodwill as per the previous gap. Okay, and the fair value exercise was not done at the time of acquisition. So because fair value exercise was not done, it means it is not as per Ind AS 103. But as per Ind AS 101, entity may adopt not to restate past business combination on retrospective basis. So if they have, of course, nothing has been given, means they do not want to restate business combination on retrospective basis. In that case, the carrying amount of goodwill will remain same. No adjustment is required. Then they have given, company had given a loan of 10 lakh. Loan means financial asset. And you can see they have given ki now the fair value as on the date of transition is 5 lakh against the carrying amount 4 lakh. So what Ind AS 101 says that if the effective interest method cannot be applied retrospective basis, means if it is impracticable to apply, then in that case there is no need to apply effective interest method. And in that case, the fair value on the date of transition will be the carrying amount on the date of transition. So in this case, 4 lakh will become 5 lakh and 1 lakh will be transferred to retained earning. Means we'll pass by journal entry loan account debit to retained earning and 1 lakh will be transferred to retained earning. This is the solution. Same solution I have given here. You can check it. Okay. Yes, sir. Coming to next point, next question. This is a question related, means I will say theoretical question. So I will not answer it right now. However, this first question, means in this they have given two parts, this or this. First question is based on what? Ind AS 1. And second question is based on conceptual framework chapter. The first question, this question I used to say in the class, this is very good question, can be asked, but I don't know whether they will ask theory question or not, and they have asked that. Means in this case, they want to ask whether exceptional item and material item are same or not. Means for that explanation I have given the class, you can write down, if you know, you can write down, you can refer the solution given in my question bank. Then this question is directly from the question bank or ICAI study material. You can say I have given the reference question number of my 13th edition question bank. If you are following my 13th edition question bank, you can take question 35 of Ind AS 1 and question 4 of conceptual framework. Okay, you can refer that. Then 6A, this is a question of accounting and technology. They have given 2 points in that, and this 2 point is nothing but they have taken from the examples from ICAI study material. They have asked you which specific computer technology can be used in the under mentioned scenario to reduce the burden and streamline the process. Give reason to support your answer. For the first, it will be robotic, means it will be what robotic process automation, and for second we will use blockchain technology. This is the solution. Correct. Reasoning, of course, you can write down in your own words. You will get marks. So for the first one, it is what? Robotic process automation, and second is blockchain technology. Chalega? Yes, sir. Then coming to the 6B, means impairment loss question. Such a simple question. I don't think so. This type of question they should ask in CA final level. Means I teach AS28 CA inter, same type of question we do in CA inter also. Okay, na? But okay, their choice. You can see they have given some future cash flow. They have given pre-tax discount rate. They have given discounting factor. We can find out value in use. They have given fair value. They have given cost to sell. We can find out fair value less cost to sell. We can find out recoverable amount, whichever is higher. Out of that, they have given carrying amount. Carrying amount, we can find out impairment loss. They have given revaluation surplus. The impairment loss to the extent of this amount will be charged to revaluation loss, and revaluation surplus and balance will be debited to PL. Then subsequent depreciation can be calculated for the next year as per the remaining useful life. Revised carrying amount divided by remaining useful life. Solution is very easy. I think you don't require anyone help for this. This is the value in use. This is the fair value less cost to sale. This is a recoverable amount. This is impairment loss. This much will be charged to revaluation surplus. The balance will be recognized in PL, and this is divided by 5. Remaining useful life, you will get the prospective subsequent depreciation. Last point, 6C. It is a question, is I used to say super expected. In my expected list, Ind AS 8 question. Same to same question is there. Once again, I don't want to discuss this type of question. We have discussed this type of question in class many times, and the same question has been given. If you want to refer the answer, this is Ind AS 8 question. Question number 8 and question number 9, they have combined it. Correct. 2 questions are there in my question bank. So 13th edition question bank, page number 4.4. This is the entire solution of descriptive part. Once again, I will say MCQ already I have discussed. You can refer that in that video. The link of that video is given in the description of this video. This PDF will get from my Telegram channel. Correct. Join my Telegram channel. You will get the entire link of this PDF. Okay, sir. Once again, I just want to say why this solution is required just before exam. That you need to understand. Just try to understand. Give 1 minute to yourself. Don't skip. Don't skip right now. Correct. Just try to understand. Suppose you are expecting more than 50 after this. I will say relax, you'll get. But in any case, you are expecting after this, your marks is what? From 35 to 45. This is a danger area. Even though you are thinking 45, it may be less than 40. Quite possible. Quite possible. So what I will suggest, this 1 month from this time to result time is very, very important. If you want to write down group 2, you can start preparing group 2. Then to okay, because you are not wasting your time. But if you already written group 2, don't waste the time. You can start studying again. And if you pass the examination, we'll enjoy. You send sweets to me. Correct now, we'll celebrate. But in any case, suppose something happened. Already you are prepared for the next attempt. At that time, you will not feel demotivated. Now with this, what? 3 times exam, you have less time for the next attempt. So what I am saying, what is the use of this suggest solution? Why we provide just after exam that you can go through, you can analyze how much marks you can score. Based on that, you can start studying. Here is studying after exam before result is not a wastage. You are getting something extra. When you are reading, when you are upgrading yourself, it is means what you are getting some extra. You are not wasting your time. Yes, if you are not doing anything, then you are wasting your time. I am not saying you are not supposed to enjoy. You can go with your friend, but in the meanwhile, you have to study also. So that is the use of this solution, otherwise no use. Correct? Worried about result, wasting your time will not help you. If you at any point of time you think it is coming from your inner belief that yes, you may not pass, start studying. That is my only request to all of you. Once again, I say this attempt result will not define your success in your life. You need to think in a matured way. Okay, say what I just want to say, all the best for your result. I am with you for every point of time. One last point I just want to add on. If you want to, because what I understood that if you have done a lot of mistake in this particular attempt, you want some guidance, so you can join my mentorship group. Correct? I am there to help you. There are two type of mentorship group. One is free, one is paid. It is your choice, whatever you want to join. The link of both mentorship group will be given in the description of this video. Do join that. It will really help you. All the best for your result. Bye bye. Love you all.